Alright, ladies and gentlemen, hello, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Today is the 21st of July, 2025. So yes, I wanted to quickly pick up on one of the economic events which is happening this week, and I think it's worthwhile mentioning it, and that's the ECB interest rate decision. Look, before we jump into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, basically, this week, we're getting the interest rate decision, and well, we're expecting no action. Also, before we jump into that, let's quickly have a look at, or let's quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, we have this upcoming event, which I need to mention as well, that this is a webinar which I'm going to be hosting, and it's going to be on Zoom, and basically you can need to register for that one. It's not going to be like publicly available, but yeah, register for this one. Basically, the point of this webinar is to prepare everybody for a possible turnaround in case you want to have a look at sectors which tend to perform relatively okay during a market turnaround. Now, this is like I said, this is the webinar for that, and I just wanted to, like I said, just to quickly mention it. So hey, no major, how to say it, no major secret there. However, something that we probably forget about. So yes, feel free to join. The description will be in the under this video. The description, the link will be in the description. So yes, feel free to join us, and that's 31st of July, 16 o'clock GMT plus 3. So check out the time when it's for in your time zone, and yeah, feel free to join. So, ladies and gentlemen, let's have a look. The economic calendar, and then straight away into Thursday. That's when I think that the main action will happen this week. So we have the interest rate decision. That's the deposit facility rate here we're getting the marginal lending rate, but this is what we're looking at here, the ECB interest rate decision, which is currently sitting at 2.15. Now look, let me just open up the chart here very quickly. So let me just shift into a monthly. So basically, this is how so far the interest rate decisions have looked like from the ECB. I mean, we go back into history here. Well, the history that I have here is from 1998, but we're looking at the most recent one. So lately, we saw the rate kind of staying at the same 2.15. The central bank did cut last time. They did go from 2.4 to 2.15. And now, yes, we're expecting the rate to stay the same. I think that the ECB is done with the cuts for now, at least. Their inflation, the Eurozone inflation remains around, well, the ECB's target of 2%. Let me just show you what I'm talking about here. Let me just jump into EU inflation. Yes, so this is the one that I'm talking about. So basically, the inflation has remained around 2%. So we had a brief visit below, but we stabilized. We're now around 2%. So basically, in a way, for the bank, there's no, I don't know. They're not gonna do the cut, because I think that what the bank is worried about, that maybe inflation could pick up later on, because it's not dropping further. I mean, I think it's going to stay somewhere around that 2%. In a way, it's fine. The central bank is happy with this, but it's a very thin line sometimes, because if inflation suddenly starts dropping heavily, then yes, then this is where they will probably consider cutting rates again to boost economic spending, to boost some sort of activity. Because look, in general, right now the European Union is going through some difficulties because they're trying to find this we can find this agreement with the US. I mean, the US has direct kind of is attacking the EU with possible tariffs and high tariffs. And I think that, look, I've said it several times and I'll say it again. I think this whole show is kind of to make some sort of a deal, maybe get some U.S. goods into the EU and basically have a flat fee, have a flat percentage on all imports from the EU into the US. So basically, like, have it like, I don't know, 10-15%, what they're trying to do, to have that in place. So initially you've threatened with higher tariffs, but then okay, let's agree on something like 10. So basically, you cannot justify just straight away putting 10-15% tariff on all goods coming into your country. So you need to kind of threaten with higher, and then you make a deal, you reach a consensus, which is somewhere around that 10-15. So we'll see how it goes. Of course, we do understand that the EU exports a lot into the US, starting from food and going into machinery and cars. And I think that this is what the US is trying to do also, to get EU start to import more from the US. But it's a difficult one, again, because if we're digging into all these things deeper, then we do understand that the certain criteria for quality in the US are a little bit lower than in the EU. So that's why there's kind of this trying to keep the standard, trying not to flood the market with goods which might not actually be good for the EU market, because again, the EU market has set some rules that the certain goods have to be met with certain quality criteria, and that's why the US goods can fall out of that a little bit, and that's why they become less attractive. So again, it's politics involved in here as well. And I would say, and the things that I was talking about, they're more relating to like food and stuff. But anyway, in terms of cars, again, we understand that European cars are quite, they do have quite a name, and the U.S. cars are also good. But again, it's they're not maybe the most popular vehicles inside the European Union. Anyway, so but still, this is what they're trying to talk through. This is what they're trying to negotiate. I don't know if they're going to reach a deal or not. I think it's just going to be that everything will stay the same on the European side, but on the U.S. side, they will all the EU goods will receive something like a 10-15% flat fee, and that's it. So yeah, we'll see, of course, how that will go through, because again, we're coming to an end. We're coming to the deadline, the 1st of August, and that is I don't know if the can will get the deadline can will get kicked further or not, but it seems like that it could be the case again. But the market is kind of tired of already of this. It's like either either you allow us to crash, or you allow us to continue pushing higher. So please decide. So yeah, nobody wants to crash, of course. So most likely the can will get kicked further. Anyway, coming back to the ECB story, yes, we're expecting the rate to remain the same. I think that they will stick around with the same number, because they want to see what kind of agreements will be done between EU and the US, what kind of implications we'll have, if inflation is going to tick up by like somehow to the upside. If it does, then of course we'll see some possible rate hikes. However, at this point, look, inflation is kind of flat. It's just somewhere around that 2%, maybe a little bit above that occasionally. And if you're asking me to apply technical analysis on such a chart, I would say there's room for some upside. Whenever we get a significant decline and then a gradual decline, the next move is kind of to the upside. But again, that's technical analysis. That's something that you probably don't apply on such a chart. But anyway, just some fun stuff. Look. The German index DAX for now has been on a nice ride to the upside in general. Yes, we slowed down the momentum a little bit, but last week we saw, sorry, not last week, the week before that, we saw a nice new all-time high. That's on the cash index here. I mean, on the main index here. There we go. We saw a new all-time high. We're not far from that all-time high in a way. It's not really moving lower or higher at the moment. I think it's stuck. So maybe we'll see some action, from the ECB or after the ECB announces its interest rate. And another thing that I wanted to point out as well, that look, the interest rate decision is important, but for all those traders, keep your eyes on something that is half an hour later. That's the press conference. Now, this is where the interesting bit comes in, because again, you will receive, Christine Lagarde will receive questions from the press. They will be asking, like, what's the future? I mean, how do they see, inflation, and do they see actually further rate cuts or something like that? So that's where the show could happen, and that's where maybe we could see some movement in the DAX and also the euro, because looking at the picture on the euro dollar, we're seeing a nice pop higher today here on Monday. I talked about this in my Markets Talk webinar, which you can check out here, basically on our channel. I talked about it already, and my idea here is that, look, for now I'm looking at this little short-term downside line taken from the highest point of July. If it gets broken, then yes, I will consider some higher levels. I'll go for the upside here, but if this downside line remains, if it stays strong, then maybe a bit of a decline here to the 50-day EMA could be possible. Look, long story short, for now, like in general, if you have a cut, then you normally see the currency weakening. But in this case, we're having a little bit of a slowdown, so maybe a slowdown in rate decisions. In general, we're not doing anything, so that means that maybe the market will see this as a positive. So I'm not going to be surprised if, let's say, we see some sort of like action here a little bit under the downside line, and then going into maybe Thursday, we'll see a breakout. Or another scenario here is that we do break out earlier because the market expects that there's not going to be a rate cut, or okay, there's not going to be a hike, but at least no rate cut, so this could be seen as a positive. I'm not very keen on seeing the US dollar on the bullish side yet. That's why I'm kind of more of a believer for the EURUSD to go to the upside. So for now, if we do break the downside line, and we, let's say, push a little bit higher, test the 1.1721 zone, somewhere around here, we start bouncing around here, and then we basically remain above the downside line, and we come into Thursday, we get an announcement. The bank is saying that, oh, we're not seeing any rate cuts in the near future, and boom, there we go. We get like a nice uplift to the upside. So just again, this is just an idea. This is just theory based on kind of what I have seen in the past. So for now, I'm watching this one carefully. Like I said, I'm not kind of getting very bearish or anything like that. We could see maybe like a quick drift, a quick spike to the downside here. If we do see something like that, and then a quick reversal back up, that would be amazing. That would be great. That would indicate that there is some buying interest picking up, potentially. So in terms of other pairs, we do have other euro pairs which are worth mentioning. EURJPY, okay, but this is a little bit of a different story. We have a Japanese yen, which could be overshadowing the euro here, because if the stock market starts reversing back down, then yep, we could see EURJPY beautifully moving to the downside, despite maybe the positivity from the ECB. And EURGBP, this one is also moving nicely to the upside. So far, so good. I mean, we're seeing some nice action here to the upside, but again, we're approaching some key areas of resistance, one of which could be this one here. But again, look, it's a little bit subjective. In general, everything is subjective here, but if I start drawing some trend lines, I don't think that it's gonna in terms of downside lines, and I don't think I'm going to get the right one. But certainly with the upside, we can draw a few here, which could be in a way working out. So hey, look, long story short, for now I think I'm gonna just still target the upside here on Euro GBP, unless we start shifting somehow below this territory, the 0.8636, or even better, maybe somewhere below this zone, the 0.8606, somewhere here. Then yeah, I will consider maybe a little bit of a retracement back down. We do have a steeper upside line right here, which could be in play, could be an interesting one. So hey, let's see what's going to happen here. And for now, I will, like I said, I will continue targeting the upside on Euro GBP, and then we'll go from there, unless I see a clearance of this steeper upside line. So, ladies and gentlemen, like I said, keep your eyes on the interest rate decision that's coming out on Thursday. Quite an important one, I think, and the most important, I think, even more important than the interest rate decision will be the ECB press conference half an hour later. So, ladies and gentlemen, thank you very much as always. Don't forget to subscribe to the or register for the webinar on next week on Thursday, the 31st of July. Hopefully you will enjoy it, and yeah, we'll go from there. So, ladies and gentlemen, thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.